startup investor perspective. So where idea is to invite angel investors come and share their perspectives. This is not necessarily a pitching event, but trying to understand their perspective, why they invest in startups, how they go about it. So typically, whenever you would want to pitch to an actual investor or the investors for your business, this experience or understanding their perspective might be really helpful to you. So Kunal, the format goes like you give a brief introduction, like some of the work, and then we'll get to the Q&A part. And meanwhile, I'll share screen. So whenever you are speaking, I'll just open up some of your websites. So thank you so much, Kunal, and just brief about you, and then we'll get started with the Q&A. Yes, Kunal.
So brief intro about me. Hi guys, my name is Kunal Nandwani. I'm the founder of a couple of companies. Run a company called uTrade Solutions, which is in financial trading software space. This is the uTrade. I run a blockchain, Bitcoin, crypto-based company called Hashcove, which is based out of UK. I run a couple of small initiatives, and I'm the co-founder and an angel investor of Chandigarh Angels Network. So, which started about 5 years ago. And prior to doing my own startups in the last 10 years, I had worked with some banks, Lehman Brothers, Nomura, etc. in London. And so currently I split between India, UK and Singapore. Mainly I'm based in India and North India in Chandigarh. I've done a few things here and there before. And I've written a book on Bitcoin and blockchain, how it may change the world in the future. And currently in the process of a book on startups that can focus on sustainability and solving real issues that we face as humanity. So that book should come out in the next 2-3 months. It's now due to the current issue, we are all grounded. So I'm using the time to write certain things. So that's a very brief introduction. And I'm an angel investor. I invest in some startups, and along with Chandigarh Angel Networks, the Chandigarh Angels Network, I've entered thousands of startups in the last 5 years. So I have some experience in evaluating stuff. And before doing this, for my own startups, I had also raised capital myself from angel investors as well as from VC funds. I've been on sort of both sides of the table. And yeah, that's a very brief introduction about me. Any of you looking to connect with me can do that now during the process afterwards. Kunal Nandwani, you can find me on LinkedIn and Twitter. And yeah, open to questions or open to specific things you want to know.
Awesome. So friends, if you have any questions, you can ask in the chat or the Q&A part. And towards the later part of this webinar, we'll have some of you join in. And before that, I'll ask a couple of questions to Kunal. So Kunal, thank you so much. You've done a lot of interesting stuff and you are still doing it. So Kunal, briefly, you mentioned about you raise your funds, you run your business. At the same time, you invest in startups also. So about your fundraising journey, what was there a conscious decision? You reached out to investors? What was that? Just brief about that, and we'll get to some other questions also.
So I raised some money for my first startup, which is uTrade. Didn't have to, since my first startup eventually became a small business and profitable, so we didn't have to raise any more, and that funded the subsequent businesses. But in the first startup, we had to invest. We build an enterprise software, so it takes 2-3 years to build a product and in fund. And we put in all our own savings, and then we went out and raised from some friends, family, and some angel and seed funds, angel investors and seed funds. And it had worked out okay because the business did okay after a while, and now it's a small business growing on its own. So yeah, so it was a conscious decision. We had to raise funds. My suggestion or thought process is that if you can live without raising, that's the best thing. Raising is not necessary for every business. It depends on what business you are in. You must know and understand that. And if you still need some funds to be raised, go do it. But some businesses can be better run as abstract, and you can do that. That is a high recommendation. Fundraising has become more fashionable somehow. People like to raise funds and flaunt about it, or raise too much funds, and sort of somehow we have in the starting that fundraising means you are successful. Fundraising doesn't mean you're successful at all. Let me get that out of the way. Fundraising just means that somebody believes in your business, somebody believes that you can do more, but every single believer, the angel investor or a VC firm or any other fund, they invest in 10 companies, they know that 7 will go down. So it just means that you're probably in the, some ratio, you have some probability of doing better from here on, but it doesn't mean that you succeeded. And you can go back and look in history. There are so many companies who raised lots of funds, but have not done well after that and have shut down. So fundraising is not a sign of success. Do it only if you absolutely need it, because it's very painful process and it's a process. It's a long time, a lot of your energy, and you have to deal with a lot of rejections from hundreds to thousands of people. And, it's not easy, right? And even if you raise, then you have to live with that investor for pretty much for life. So it's almost like marrying someone. So it's not as romantic as it sounds.
Okay, so that was the question. So Harshit, your question got part answered. So Harshit's question was, Kunal, how do we know whether we should bootstrap or raise a fund, or when is the right time to go about raising?
So sure. So let me tell you concept of business first. Okay, how does a business work? Let's say you are in the business of doing e-commerce in India. Okay, I'm just taking some examples which you may be able to relate with. What is e-commerce business in India? It is not about who has the better platform. It is not about who has the better logistics. It is about who can give more discounts and retain more customers, because in the current market, or it's in the market was who can build the market better. So Flipkart, Snapdeal all ended up trying to building the market. And in building the market, you are in the business of fundraising, right? So business you are, I don't know if any of you play poker. In poker, if you don't know who the fool on the table is, then it's you. So you need to really know what's going on in your market, the market you are trying to address. Are you disrupting someone? Are you competing with someone who has more money than you? Are you competing with someone who's raising you? Are you building something which is better, cheaper, faster than everyone else and can be the disruptor? So, it's important to understand those things first. Once you know which business you are in, now you need to look around on your flows. Are you able to sustain your business? Can you make revenues while you build your product or service or your platform or consumer base or whatever you're trying to build? If you can do that without losing too much money and you can manage your burn in your funds, as long as your competition is also not raising more than you to kill you, right? So Swiggy or Zomato might be building a great platform, but if Swiggy is raising more, Zomato is scared because Swiggy will be able to give more discounts. So Zomato has raised, now Swiggy has to raise. So that's a different business model. So leave food tech or whatever, how they call these different jargons of every business. Leave Paytm for a while, leave Flipkart, Snapdeal for a while. You might be real business, you might be building a real product. You don't need to raise too much, very likely, right? But if you need to first know which business you're in, and then know what is everyone else in that market doing? What is the consumer doing? What is your competition doing? It's like, if you can manage your cash flow within it without raising, do not raise. If you think you cannot manage it, you need to raise a little bit, raise it from your friends, family, and fools, which is the first round, they say. If you need to raise a bit more, few lakhs, few tens of lakhs, dozens of lakhs, or few crores, go to angel investors. If you need to raise more, you go to some VC fund or somebody else. So, but it's important to know which business you are in, one, what is your competition doing, and how can you manage your cash flows. You might be able to create value without raising any money. You might be able to do something which nobody is thinking of. It might be a disruptive model. It might be something very interesting. It depends. That's a short answer, but I've tried to give some examples which might be relevant.
Perfect. And Kunal, how did you get into angel? So you mentioned about you co-founded Chandigarh Angels Network, got into angel. So what was that trigger for you to start investing in startups?
So I had raised some money for my business. I'd been that it's 5 years and the business became profitable, and now I started to talk to startups in terms of helping some or investing in some or mentoring some. And I realized that in the area like Chandigarh, they were not there were people individually, but there was no platform where everyone could come together, where startups could go to and find a mentor or find an investor, or entrepreneurs could go, or the investors could go to and find good startups to invest in. So I had this idea, and a few other people in the region had similar idea. So we co-founded the Chandigarh Angels Network in order to build the platform where everyone could connect, just like you have co-founded echai. So that's how we had come up with it in 2015 or 14 or 16, I forget. It's been a number of years, 15 or 16. And since then, we have currently more than 50 angel investors in the group. All are available for free mentoring to anyone. You'll be surprised how much angel investors / business people are willing to give your time if you are willing to ask. So all you gotta do is ask. Go with a qualified introduction. Go on LinkedIn, write a message. Qualified introduction is better. If someone who knows the person, they are likely to respond, and they do give time. Everyone, when it comes to cutting a check, they are very selective. But in terms of giving time for advice, they're all willing to do it. So, from Chandigarh Angels Network, we do mentorship. We run free mentorship clinics. We do these kind of webinars. We do tons of things. And we invest in startups. So we've done 20 plus investments. I think, I don't know the exact amount, but maybe 20 crore plus invested over the last 4-5 years.
Wow.
And that's how we started, and we got in and did a great traction since.
Awesome. So there are a lot of questions for you. So the questions would either be about your perspective on those things that startups get asked by the investors, and then your experience.
Sure.
So the one question, how to evaluate pre-revenue startups?
So it's very hard. Pre-revenue startups. Broadly, I would suggest there are maybe 2 ways to do it. One is look at how much cash you need, how much money you need to run it for 1 to 2 years or 1 to 3 years. Okay. Let's say for 1 to 3 years, you need, say, 50 lakhs. In every round of funding, you will dilute 10 to 25% of your equity. Meaning, if your company is worth 100, 10, any number between 10 to 25, or let's simplify and say 20 or 15 to 20. If you want 50 lakhs, give or take, if you want 50 lakhs and you want to give 20% of equity to your investor, this means that your valuation is 2.5 crores. Thumb rule. There's no science. Don't put all the revenue projections, discounted capital out of the window because they are never achieved. I've not seen a business plan in Excel which has worked ever in life. All of them change dramatically, and always for the worst, rarely for the better. That's one way of trying to value it. Second way is that do not do the valuation and do a convertible note, which means that do not decide the valuation today, and you say that in the next round or the next to next round, in the next 2, 3, 4 years, if you do another round of funding, whatever your value is decided. Let's say 2 years later, somebody puts in 2 crores for 10 crore valuation. Now today, somebody has given you 50 lakhs. Means that 10 crore valuation in 2 years, you discounted back 20%. So means that a year before it was 8, a year before it was 6, give or take. I'm getting the numbers, might be wrong, but so say you were valued at 6 crores then, and at that point you give 50 lakhs worth of equity out of 6 crores, means that you're 9% or something. Rough maths. So you can do a convertible in which you don't value it today. You wait till the next round valuation, which is done by a more professional investor, which is post revenue and better place to do it for you. And then there are in it. You cannot have the valuation lower than 1 crore, or you cannot have valuation more than, let's say, 20 crores or so. So those things you can apply. So that's a convertible note you can consider.
Yeah, there are more questions. So there is a question, sometimes a lot of startups are, if there are no comparables available for the startups, how investors would evaluate them?
Sorry, if there are comparables.
Like similar looking startups, or is there a thing called similar not having a comparable?
So I'm not in favor model. If you tell me that you're in car hailing business and Uber is valued at 100 billion and you, or 50 billion or whatever SoftBank is valuing it today, and you are in the same business and you should be 1 billion today or something like that, doesn't work. It's I don't think many people come up with the examples of very large established firms or who have raised tons of money and valuing yourself compared to them. You can't do that. That's not a fair comparison. Do not also show, and I see that this a lot, do not also show that your American counterpart got funded at 3 million at a 10 million valuation. You're only asking for 1 million at 5 million. That doesn't work either. I'll tell you why. US is a different market. It's 10 times bigger, 100 times more efficient, lot of opportunities there. India has a lot of challenges, ease of doing business in India, just see the ranking, etc. So it's hard. So the comparables are generally early stage, very hard to compare with. Now, Zomato, Swiggy doing their valuation compared to each other may still work. Zomato, Uber Eats in US may work because they're big enough, right? But early stage pre-revenue or very early stage, it's not a good way to look at comparables.
Okay, Bhushan has asked, I have my platform built, I have traction, but I need money for marketing and scaling and further development. Should I raise now?
Look, if you think you can raise, sure, do try. But again, how much money do you think you need? Depends on that. Number one. Number two, if you your platform is ready, have someone validate that. I'll tell you, as an entrepreneur, we all think we are ready, our product is ready, but we are far away from it in reality, and we are not willing to admit it. So frankly, what you think is ready doesn't mean it's ready for the market necessarily. That's one word of caution, I would say. But secondly, if you think you cannot run your without raising, do go out and raise. And if you think you're ready, do go out and raise. But pre-revenue, it'll be very hard. And right now in the COVID in coronavirus situation, good luck. It's gonna be very tough. So you may want to conserve your energy for a few months and figure out some other value you can put in your platform before you go out and raise. But if you have no other choice, there's not a day's bill you can pay without raising. You need to raise. And thumb rule: if you need to raise money, so look in your bank account. All startups, if you think you need to raise money in 6 months, you need to start now, because fundraising takes 6 months to 1 year at least. Lucky, you may still not. A lot of people try and do not end up raising. So just FYI, you cannot start raising the day you run out of money. You need to start 6 months to a year before. Okay, so do keep this in mind. So it may be the right time for you to start talking to people, you have more value in your platform and bringing some customers and traction somehow. But remember, it'll take time, and in today's market environment, it may take a long time.
Okay, this is an interesting question by Marvin Bird. What are the minimum money required to become an angel investor?
What is the minimum
money required to become an angel investor?
I think typically angel investors start investing at 5 lakh rupees or 2.5 lakh rupees per startup per investment round. So minimum is 5 lakhs, but this is the money. So do not become an angel investor with the 5 lakhs of your life savings. Okay. If you're earning a year 5 lakhs and putting 5 lakhs in a startup angel, you're becoming an angel. It's stupid. Don't do that. This is the money you're going to lose. Let that set in. Angel investors give the money they give to startups, imagining the worst case, they're not going to see it back. Yeah. Okay. Most angel investors end up losing a lot of money. So before we do 10, 20 investments, I don't expect anyone to make money. Most of them will lose. Okay. So do it when you have, let's say you have 1 crore of cash in your bank account. Let's say I'm making a number up, and you're okay to lose 10 lakhs if you lose it. Sure, you can start considering to become an angel investor, invest in 2 startups a year. As long as you have something else, some other business or something else going for you, do try and go and become an angel investor. But don't do it if you're okay. That's not how it works. First few investments, you're likely to lose.
Okay, and this is a question that is being asked to a lot of startups, and sometimes it is very confusing to answer. How do we calculate the size of the market, total serviceable market, and total achievable market?
Okay, so it's a bit of science and bit of guesswork. Okay, it's at the end it just means that you've done detailed in your market. So there are some markets which are reasonably well established. Let's look at the market. E-commerce. You have millions of numbers out there on millions of websites. They'll say it's a $20 billion market in India, growing at NASSCOM will give you a number like 20 today will be 50 billion by 2025. So you know the number. E-commerce, this is how much people will order. How much of 25 billion or 20 billion can you address? Now, if you're selling only clothes, let's say you're selling kids clothes. So your segment is not 20 billion. 20 billion market, you're civil with clothes for kids. If let's say that's your business model, you are doing the baby oil or something like that, then your model may be 1 billion or 2 billion. There may be a number Mascom or someone else. Food tech market, it's defined. You know the numbers. They tell how much they do per order. They do millions of orders a day. There are 3 companies in India doing it. You can add up, you'll get the number. It's harder for unestablished markets. So let's say you want to look at esports market today, which is still and growing. It's a small number. It will still be available somewhere. Let's say you want to build something for coronavirus. Let's say you are finding a cure for coronavirus. Okay. How big is the market? Potential is 7 billion. How much is addressable by you? You can sell only debit, can't export. Every country has its US FDA policy will come in, etc. You can't get clearances. Your addressable market is 1.3 billion Indian population. What is the realistically target market you will have? Not everyone will get sick. So maybe say 60% may get sick in the next year or 2 years or whatever time, whatever WHO is saying. So you'll come up to a number of 600 million is your target market, out of which maybe you can get local market of Punjab or Gujarat because you're based there and you can locally, right, even in the case of lockdown. So this is how you need to run the numbers. I'm just making some random numbers up, by the way. They might be very off, but it just means that you need to study and know your market well. Like I said earlier, you should know your business well. You need to know your market well as well.
Yep.
Who's there? Who's their alternate? Who's competing in Punjab? Who's competing in Gujarat? Who you're competing against in US? And if you haven't thought that through and you don't have an idea about it, you're gonna lose. You are the fool on the poker table, right? So do understand this, and this is how you may get to your target market numbers. Okay, I'm just some numbers. I hope they add up to you.
Yep. There are a couple of questions around pretty similar one by Pranav Malhotra and Bhushan also. Will the coronavirus situation affect the fundraising landscape, or what? So like you are like an insider. So what is your view on that?
Sure. Definitely it does impact. The reason is the following. All the angel investments, like I said, people are doing with their spare money. You know, people who have spare money, 1 crore or 100 crore, they have that spare money because they are having some cash flow coming from some businesses which are going on the side. Today, most of some businesses on the side, the real core focus business of all angel investors are in trouble. This might be selling hotels, maybe providing travel services, might be providing a software to British Airways. You're screwed. Right now, you have no revenue coming. You will cut into your spare checks and you will save it for the rainy days yourself. So currently, all angel investors will go super slow. All seed investors and VC firms will go super slow because they're not going to be angel investors because they may or may not see too much revenue coming in or profits coming into business. Best make sure their business survives. They pay salaries to their employees, which will be a higher priority for everyone. If you're a fund or a VC, you will not be able to raise the next 1 billion or 100 million or 2 billion again easily in the next 1 to 3 years. Your investors are also now in the tough spot. So you're not going to raise for 2-3 years. So you'll become very selective. So everyone will slow down all investments. Currently, it's all about putting your head down. And if anything, the angel VC investors will look into investing and making their who have a decent business model, but are unable to survive because of the tough market. So, you would rather save your current family rather than look into your future potential families, right?
Very well answered. Ashwin Savani from Surat has asked, we are enterprising SaaS product focused on Indian SMEs, average INR 3,500 rupees per month per customer and having operational break-even. Is it advised to grow organically or get funds to grow faster, particularly after Corona market situation?
Organic. Number one, because by the time coronavirus is here for a few weeks, few months, few quarters, realistically up to a year. In that year, you're not going to be easily able to raise money. So raising money is going to be was hard on a scale of 1 to 10 at level 10. Now it's going to be 100. So it's harder than you imagine. It's not easy to raise funds. Okay, let me get that again straight. So I reckon you should try. You have a reasonable business. You have something going for you. Try your revenues. Keep your head down and manage your cost as well. This is not a good time to raise. And in business SaaS models, if it's working and scaling, really, you may not need to raise too much or any money at all. So frankly, try to not raise in my view.
Okay.
Right now, try and add more value into your platform, try and add more value for your clients and bring more clients if you can.
Awesome. Shivans has asked, how should a startup at pre-revenue stage value itself and its assets? Also, does the intellectual value of founders count?
Not beyond a point. So like I talked about valuation a few minutes ago. Go back to 10 minutes before answer. It's the same thing. Ideas. So how many? So let's ask a question. I want you to answer this in your mind. How many of you think ideas of your startup should be unique? Don't answer here. Just think. Okay. The answer is it should not be unique. Ideas work. Idea has zero value. Okay. I can give you 10 ideas right now, which will make $1 billion in the next 5 years to some startup. If you are looking for an idea, I'll give you an idea. I'm writing a book with business plan with 10 such ideas. Okay. Do connect with me offline on LinkedIn and I publish this idea as well. 10 business plans, which will definitely make $1 billion by 2025. It's not the idea. Idea doesn't count. IP of people, your knowledge doesn't count. What counts is how you can execute this better than everyone else. That is what the real market is. Do you think Google was the first search engine? No. Alta Vista existed before that. Do you think Facebook was the first social network? No. Was Apple the first, iPod the first digital music device? No. Many others existed before. Being first never helps. Actually, it's better to be a little late. Why do you think Amazon came in after 5-10 years of Flipkart and Snapdeal? Because the market was built by them. Amazon came and took the market. Amazon thanked them that, investors put billions of dollars in training people how to use Amazon, right? When Amazon came in, everyone moved to Amazon, right? This was a statement made by some VC I heard. So coming back, IP, I don't value it much at early stage or startups. You don't know if the product will work, clients will pay it. Unless you are a NASA scientist or you built something of rocket science, or you've got some electric car charging thing which even Elon can't build, then IP may be valued. Otherwise, more likely, not all of us are in the similar boat. We are not geniuses, so none of that values, and none of that is as valuable as you may think. And regarding how much you should value, go back 10 minutes in the webinar later. You'll find the answer.
Yeah, Kunal, so you run your own business, and you invest in startups. So are there any cases where the startups where you invest in, they operate in a certain way, and you would want them to operate in a certain way? So what happens in those cases?
So personally, this varies from angel investors to angel investors. Some people invest and they want majority of the company, or they want a big chunk and they want to control what startups do. Very few angel investors are like that. Really, you want investors because it doesn't help. At the end, the way I operate is that I would give the money. If some startup needs some advice or some help, they can come to me. If they want me to connect them with one, I'll try. But I'm busy enough running my own life and my own businesses that I don't have any time to actually give gyan. I just hope that they have more to gain, more to lose if their startup works. So hence, they are the ones who should be driving. They are the captains of their own ships. So I don't give any advice unless they ask. Of course, if you need help, I'm here. But I'm not gonna come in day to day and say, why are you not doing this? Why are you not doing that? It's none of my business.
Okay, so a couple of questions around very technicalities. Is it compulsory to include investors in board after investment, or do investors who want to get on the board seat?
So not compulsory to take anyone on the board. Depends if they're given a lot of money. Angel investors are optional to be on the board. Some want to, some don't. It doesn't matter. Frankly, I don't know if you know, Indian corporate laws are very strict. In case you do any mistake, you do any misfilings, all the board of directors are held liable. Thank Vijay Mallya's and many others in the previous years. So frankly, most angel investors do not want to be on the board because they know that there is a liability they are taking. It's not a privilege anymore. It's a liability. So actually, I don't think most angel investors would want to be on the board, but VCs do take board positions so they can control the strategy a bit because they put in a lot of money as well, which is not their own money, they raise from someone else. But anyways, they do take board positions, but angel investors do not typically on the board. So if you can choose to have them, if you like them and you feel you want the value from them, sure, take them on if they want to. But otherwise, I would imagine that angel investors would stay away from it.
Okay. And is it advisable for a startup founders to take their consultants or other people to negotiate with their potential investors? Have you seen that, or would you recommend that?
It happens a little. I think no, I've not seen much. There are very few consultants in the picture, but I would not advise that. I think you should be able to negotiate. It's your business. You should be able to negotiate directly with the angel investors, and remember, while negotiating, you should negotiate a bit, no problem. But remember, 100% of zero is a zero. So you can't keep all the equity and imagine you'll build some value if you don't have money. So you do need to compromise a bit. But yeah, you should. I think you should try and negotiate directly. Even if you're a bad negotiator, tell your angel investor that do a fair deal. And eventually, angel investors know that if they take too much of the company, you will have less to gain, less to lose eventually, and you'll not be interested in running it. So I don't think angel investors are. So frankly, they should do a fair deal, try and find the fair deal. I don't think you need consultants. If you need a consultant to value a company or to have, to negotiate your valuation with the you'll struggle in your business because you'll need to do tons of negotiations yourself in life. If you're a co-founder, you need to be able to manage this between the co-founders. One or two may be better than others to do this, but you should have this skill in your team because you'll need to do sales, you need to do tons of things, and all the negotiations would apply there as well.
Chandrakant has asked a very relevant question. What kind of new wave of startups do you see post COVID-19?
More focused on healthcare, telemedicine. Telemedicine is the healthcare ATM kind of a model, remote doctors, etc. More deep research in healthcare around viruses, new models of developing new medicines like RNA, DNA based rather than salt based. A lot of biotech stuff, lot of companies that can make masks, ventilators quickly, the hospital beds, convert them into something, etc. So all these things, Bill Gates talked about this last night. I think I was watching it on CNN or CNBC.
On TED also.
So I think, so TED Talk was 2015. Now recently, last
so he did another
TED
Live recently also.
Okay. So yeah, tons of things around this. I think healthcare will, in my view, take over the budgets that defense industry gets a year. People said new nuclear powers or new nuclear bombs or new helicopters won't help if you have nobody to save. So I think every country's healthcare budgets would increase dramatically, and defense, hope that happens next year, if not starting this year. So I think such opportunities will come, but telemedicine is a hot area in my view. Everywhere there should be a telemedicine counter, just like an ATM machine now replacing a bank. You can have telemedicine connecting you to a remote doctor dispensing the machines.
So you believe healthcare is going to skyrocket?
Very likely. Yeah.
Bhushan has asked, so typically what kind of due diligence you do before investing in a startup? And the other part is, who bears the due diligence cost, investor or founder?
So it could be a mix of sometimes investors bear, sometimes the co-founders of the startups can bear the cost. Startup or the investors both can bear or share the cost. But generally, investors will always appoint an auditor. They will never accept an auditor that is selected by the startup. Okay, startups may have to pay for the auditor that's selected by the investors. Okay, that's one. But I think in terms of due diligence, they'll just check what you told them. So say if you had pitched them that you have $1 million business, or you have 100 clients, or you have this client or that client, or this product or that product, they'll just check all that. They'll check if you said you have 10 employees or 100 employees or whatever. They'll check that whether you're filing your accounting is in order, that you're filing taxes, GST, all the compliances. You have the revenue and payroll numbers that you say you have. They'll check your variety of things which are linked with compliance. So essentially, whatever you pitch to them is what they're gonna check. If you client contracts, you said that you have a contract with a big client, let's say Maruti is your client and you have a big contract with them, they may ask for a copy of the contract just to see what the contract says, etc. So those kind of things, whatever you've said is what they're gonna check. Any projections you've made for the future, they can't check you, and you can't check it yourself. So I don't think they check that.
Yeah, awesome. Srinath has asked, do angel investors invest on pre-incubators, like especially startups started by students in a university or institution who are not yet registered as a company?
Sometimes they do. So the first round of investing typically for such students comes from their friends or family. So typically it's their friends or family who are investing at pre-idea or /idea stage. And the investment amount may vary from few lakhs to 10-20 lakhs or so. So that's how the investment works. Professional angel investors or angel investment networks do not invest pre-product, pre-company, pre-revenue. So they will need a company to be there. They'll need some product and some traction to be there before they come in. So frankly, professional angel investors would not. Ideally, if you're a student, look in for grants by the government, by your college or university, by alumni funds, etc., etc. There may be tons of other schemes. Banks have schemes to give unsecured loans to startups, grants. So government has a lot of policies and stuff. So try to get those if you can. But otherwise, professional angel investors do not invest pre-company.
Okay, awesome. So Kunal, can you share some examples of some of the startups you invested in, why you chose to invest in that startup? There are multiple reasons, but what was that key trigger for you to invest in a particular startup?
So I invested in a company which does healthcare ATMs. So I was just talking about it, space, and I actually found the idea very interesting. I do think that ATMs can replace, like the ATMs have replaced a lot of banking services. So same way healthcare ATMs can replace the hospital services, and that's a need of the hour. You not bring out such technologies. So I looked at the market, I looked at the potential, it has of doing the social impact. So I invested in that. So these are the kind of companies I would look at, or I would look at some area. So one of the things which makes startups very successful is the massive growth in the market. So we all want to be in massively growing markets. So today the growing market is not e-commerce. Today the growing market is not food tech. I mean, they're growing, okay, but e-commerce is not a growing market. It's definitely shrinking. So you don't want to be in these markets where there are already big players there and you can't make much difference. You want to be in a market which are likely to explode from here, which are like 100 today and can be 10,000 times from here. These are the markets like in the next 10 years. If you look at esports, people staying home, watching games, playing games, betting on games, doing whatever. These kind of things are the next big thing. So find the trend which you think in the next 5 to 10 years may make it big.
Okay.
If you're in that market and if you do good work, you're likely to become very valuable.
Awesome. So Kunal, one thing is healthcare, e-lending, those kind of startups would see a greater opportunity. But what about so there are a set of startups who were about to launch in this time and suddenly this situation has arrived. So what should they do, or what should the startups who are not focused on those sectors and still what should they pivot, or what would you recommend them?
Again, hard to say, depends. I think it varies from company to company. There are some business models which would still work, which may be offline, which may not be a massively growing market, but they could do reasonably well for the co-founders and the startups. So they may keep their head down and do the same. But really, you're motivated by. Why are you doing it? If you're doing it just for money, you are unlikely to survive too far because it's too hard to do a startup. We all know 90% or 95% shut down in the first 3 years. So how will you survive startup journeys in even more challenging times like right now if you're not truly motivated by it? So your motivation has to be very important and very paramount to what you're doing. You should be really driven by the cause of your startup's existence. If you're motivated by it, whether good or bad, keep doing it. If you're not motivated by it really, and you had just looked upon somebody else's idea and just done it because you could, maybe this is a good time to pivot. It's hard to know for co-founders when to shut down. I wrote a blog on this like 5 years ago. It's hard to know when to shut down. On one part, we say that you should persevere for long, etc. But on the second part, you should not drag it too long when it's not working. So there's a thin line somewhere between that. So you may choose to pivot if your business model is not likely to survive the next few months because without cash flows you may not. But if you think you are really driven by it, you're really passionate about it, and you believe it can work even after and during you can survive somehow, go with it.
Okay. Awesome. Harshit has asked,
but this is good introspection. Take a step back, think again why you're doing it.
Yeah. Harshit has asked, we are a Punjab University Chandigarh incubated startup at a MVP stage. How can we reach out to you, get an advice, and get some help? And the same thing, what would be the right way to reach out to investors? What is your advice? And personally, how do people reach out to you?
So let me answer this. Actually, it'll take 5 minutes. I have an answer, but it's a longer one. So short. Long short, at the best way is to reach out to people. Again, I think if you are in, let's say, in Punjab University, or you are anywhere else, you are in Chennai University, look out for local angel investors. There are local angel investor networks. You can find people on LinkedIn. People are very approachable. Connect with them, send them a request, and be very clear. Don't spam them, and understand that they may be getting hundreds of such messages every day. Okay, so you need to somehow distinguish by writing a crisp message directly if you want to try approaching them, or you should be able to find someone who knows them. You're in Punjab University, somebody in Punjab University might know an angel investor somewhere, may be able to connect with. At the same time, you try connecting with all of them. So, do both approach. Go with a qualified introduction. If somebody recommends you or says that, okay, meet this guy, or you should be able to find some uncle, aunt, friend, cousin, someone who knows that guy. For all the participants here, if you want to connect with me on LinkedIn later, drop me a message or connect on Twitter. These are the two social media I'm on, and happy to connect and speak. For anybody in Chandigarh, reach out through Chandigarh Angels Network.
Awesome. So we'll take up last 3-4 questions. So what kind of traction you look for pre-revenue B2C startup trying to raise funds, raising around 1.5 to 2 crores? So this is a very specific question.
What kind of traction you look for pre-revenue B2C? Okay, pre-revenue B2C, you are looking for 1.5 to 2. I think I would look at what is it that you're doing B2C. What is your C? How big is C? How competitive is C? How good your product or service is for them? And who else is in that market? What is the timing? Is it a growing market or a shrinking market? How driven you are by what you're doing? Because at the end, remember, there are two things which make startup work. Number one is the timing, which you don't control. Unfortunately, you don't know at point in time which time cycle wave you're in. Second is the founders. So it's the people. Good people can make even bad business plans work because they pivot and adapt. But bad entrepreneurs will even make the good business plan suck. So eventually, it's your passion. So we invest in people. It's not the idea. It's the people. If the people are great, if you guys are good, and your markets are likely to grow, these are the positive checkpoints. And there are a few other things around it, but mainly timing, people, and the competitive landscape you're in, the market is in.
Awesome. So you mentioned about Chandigarh Angels Network has around 40 angels. So
Yes.
How can somebody be part of it, or what is the criteria to become the angel at Chandigarh Angels Network?
So, frankly, we get a lot of requests for people to become angel. There are a lot of people who have the money, who are nothing wrong with having money, but they need to be professional at the same time. So we don't want money from some, I don't know what's the right word to put it, from Lalaji with money coming there and not behaving professionally with the people. So we just want that they should become recommended through 2 or 3 other angel investors of the group, and they be professional somehow. That's it. So on chandigarhangelsnetwork.com website, there is a way where you can apply to be to pitch as a startup or to become an angel member. So you can do both, and you will need recommend a member network, sort of closed group, sort of. But so we want them to come through some recommendation, just like any members club, I guess.
Okay, so when you started it, one of the idea was to build a community in the region, but now it has evolved. So would Chandigarh Angels Network expand all over India? You actively seek opportunities outside, or what is the way forward now?
So we have done reasonably well. We run a lot of monthly, quarterly, annual events to educate people about startups. Why should they do it? How should they do it, etc. So with the startup entrepreneurship wave will grow a bit more, I guess. We have invested in the companies we invest in are all over India. So the companies we invest in are not from Tri-City, frankly. Out of the 20 investments, maybe there is only one which was from Tri-City. I don't remember, but maybe 1 or 2. But of India only. So frankly, we are pan-India. We get some choices once in a while from outside India as well to invest in companies, but we don't really understand the market, so we don't really get in there. For members, also, we are not actively seeking for members. Rest of India, there are other local angel investor networks, and it's not a competition. Frankly, we cooperate with most of them, and we have a MOU, and we share deals and we syndicate deals with all of them. So frankly, we would not be necessarily looking for an angel investor in Chennai, which would be Chennai Angel Network. Though we do have a remote membership model for some NRIs of the Punjab region or the North India region who want to come back to Chandigarh once, twice a year, and remotely they're happy to attend some pitch sessions once in a while. So this is how we are growing and going so far.
Awesome. So we'll take up this as a last participant question. There are 2 questions now.
Okay.
Do investors prefer for convertible notes? And can you just brief more about convertible? Because when you were speaking, the voice was breaking.
Yes. Okay, sorry. So I've seen many investors do not prefer convertible. Some are okay with it. So you need to see whoever has agreed to invest in your company, whether the convertible, they're happy with it. Most actually, I can say majority angel investors, which might be 50, 60, 70%, I don't know, making up a number, are less comfortable with convertible because they want the valuation to be done today. So they know how much of equity they hold. But that's how the Indian angel investors are. I'm personally okay with it. The convertible note essentially is sort of a loan which converts into equity a few years later when based on your next valuation round as a discount to that round. So today, let's say your valuation, you are unable to determine your valuation, you do a convertible note and you say in 2 years, if you raise 10, X amount, the valuation today will be determined by the value with applying a discount to it. So a lower valuation than what it is then. So you may say agree on a 20% per year discount rate. For example, 2 years later, if you raise money at 10 crores means 20% discount every year means today it becomes 2 some crores. So that is your valuation today. And at that money, you will get the equity raised to you. Equity will be issued to you. So this is the model of convertible. Many Indian angel investors I've seen, unfortunately, do not want to know today how much equity they are getting.
Yeah. Awesome. We will take up this last more question because Kshitij has insisted that should a co-founder withdraw salary from seed funding? If yes, how much or how you decide the salary? So what is your take on that? Founders taking salary?
So of course, founder should draw salary. No angel investor wants that founder should go hungry or should not be able to pay themselves at all. That's not the right thing. I think co-founders should draw salary, but it should not be. They should not say that I was at KPMG and I was getting a 1 lakh salary and I want to get the 1 lakh salary. That's not going to happen. So if you're getting a 1 lakh salary, you should come on a sheet, but you should say that my cost is 20,000, 30,000, 50,000, whatever, and that's the salary I'm going to draw to stay comfortable. If you have family, you may need a bit more, right? But if you're alone, you don't need more than 30, 50,000, especially if you're living alone or with parents, etc. So founders should draw salary. There's no problem. The amount should be disclosed to the investors. There's no problem, but don't make it insane salary. It should not be that you've raised 1 crore and now your salary is 5 lakhs a month. So 60 lakhs of the year is to yourself. That's wrong.
Awesome. So Vinit is here.
There's one last question. Do you want me to take it? There's one last question. Do you want me to take it? I think it's okay to quickly.
Yes.
So the last question, somebody has asked Bhushan that why, when an investor is asking 51% of the company, how do we take it, positive or negative? The idea is it's completely negative. You should not do it. I've seen people give 50% or 40% or X% of the company, but then you're gonna have very likely if you raise one round, you may need a second round as well. When you need the second round, you will again dilute 25% more, and you and your co-founders and employees will be left with almost nothing. Now you'll feel that you're working for the investor and the second round investor and the initial investor. So you'll not be as motivated. So frankly, 51% of any dilution round is wrong. You should never dilute more than 10 to 20% of your company, unless it is Reliance and it's Ambani or something else who do a lot more. Okay, who's your target client, etc. So barring that exception, it's a negative in my view.
Awesome. Vinit, if you're able to speak, probably if you can just also come online.
Sure, Jatin.
Yes. First of all, Vinit is a VP at Chandigarh Angels Network, and thanks to him, we are able to set this up with Kunal. So Kunal, thank you so much for your time. And Vinit,
Sure.
if you can just briefly, there were a lot of questions on how more people can get engaged with Chandigarh Angels Network.
Sure. Thank you very much, Kunal. You've spoken great as always, and I'm sure many people got answers to their questions. And thank you, Jatin, for organizing this. So anybody who wants to get in touch with Chandigarh Angels Network can go to our website. Just Google Chandigarh Angels Network. And if you're looking to raise money, just apply to pitch. Our team will screen your application, suggest what to do further, and help you with the rest of the process. And yeah, we can do one-on-one calls with the participants who are looking to raise money basis whatever information we get from them.
Awesome. Thank you so much. Yes, Vinit.
We are happy to explain our thesis further with the participants. maybe 101. So you can apply through a website, or through Jatin, you can get in touch with me, and happy to take any further discussions.
Yeah, I'll share Chandigarh Angels Network's website information also. And also, if on LinkedIn, you can also get connected. I've tagged Kunal also and Vinith also. That would be a good platform to get in touch with. And thank you so much, everyone. I'll be uploading this video tonight on YouTube. So if you want to rewatch this, you can go to the echai YouTube channel also, and it will be available on Chandigarh Angels Network channel also. And this was our first collab with Chandigarh Angels Network. So thank you so much, and we look forward for more such collabs. Thank you so much, Kunal. Thank you so much, Vinith. Kunal, any closing remarks from your side? The summarizing kind of questions or any hopeful thoughts that you would have for everyone? You are on mute, so probably you can speak up. Oh.
Yes, I'm on unmute now. So I think a couple of things I would like to conclude with, if I can. Firstly, do the startup for the right reason. Don't do it because you think you can make money. Don't do it because you see someone else making good money with it or raising good money with it. That's how most of us end up doing it, right? So my suggestion is that do it for the right reason. Do it because you're really motivated. Doing a startup is hard. It's really hard. 95% you're not gonna succeed. Odds are no different even if you are a super genius. Okay, so do it for the right reason, because if your motivation is right, that will help you persevere for the long term and hopefully build a good business. So motivation is very critical. To look inwards, the motivation, passion should come from inside. You should really be looking to solve a problem. That's number one while doing a startup. Secondly, avoid raising money if you can. As an angel investor, I'm telling you, do not raise money if you can live without it. Okay, look at your business model. I've talked about it earlier. Not money if you can. And thirdly, if you don't have an idea and you want to get an idea for what to do and which is a more motivating model for you, I'll try and post a link here where I've given some really good ideas which are more towards we face as humanity. This kind of a crisis presents an opportunity. Take a step back, look inwards, think inside. What are we doing? What are we meant to be doing? What is our journey? What is our motivation? What humans are meant to do? And everyone's journey is different. So I'll share a couple of blogs, links here. Quickly click on them before this window disappears, I guess. And feel free to go through them and find some motivating ideas. So I'm just going to share a couple of ideas. I think that's enough Gyan today. So I'll let you go. And I'll just post a couple of links here if that's okay, Jatin.
Yes, and I'll also put it on the post webinar update also.
That'd be great. So I'm just finding some articles that I posted on LinkedIn earlier. Okay, and any of you, if you need any time, frankly, these days I'm grounded, so I have more time. So feel free to connect, and I'm happy to give you whatever.
We do this exercise where we ask our guests to choose the best question and give some reward. So probably which question according to you was good?
Yeah, I can do that. Sure, happy to.
So which question was good? Like there were a lot of questions you found interesting.
Okay, you're asking me now. Which question was good? Hold on. 30%. So they're all practical questions. How should I do? We'd love to get in touch. MVP. They're so. I mean.
Any one question, probably.
Yes. Maybe the board seat one was different. Should we give a board seat or not? That's something I get less and less of. You look into team strength. What do you look for in startups before investing? Should we use a consultant? I mean, I don't know. It's hard. Vinith, can you do this for me? Hard. Maybe the only unique question I got, which I've never been asked before, and there's a reason why I've never been asked before, because COVID-19 didn't exist before. So how will COVID-19 further affect the investment? So that was.
So Pranav and Bhushan had asked that.
I hope I answered it okay.
So probably
okay. So congrats to him. Good question. Yes.
If you can tweet to Kunal or reach out to him on LinkedIn, you get 10 minutes of his time.
Yes. Awesome. That's a price. $10 billion ideas. If you don't have one, here are $10 billion ideas I'm posting, giving them to you for free. If you make some money, give me $1 at least. And here's one more. Yes, and give some to e-network as well, so it can promote itself and become a e-coffee network or whatever. Sorry, bad joke. And one last on the upcoming starter book, which will come in the few months. So kindly feel free to look at the links and follow them. Okay? And find me on LinkedIn, Twitter if you like, and feel free to get in touch.
Awesome. Thank you so much, everyone. With this, I'll
Thank you.
close the meeting.
Thank you. Thanks, guys. Stay healthy, stay safe. Bye.